Ready to dive into Bitcoin and crypto investing? Then you should watch this video till the end. Please subscribe and like if you like this video. Introduction to Bitcoin ETF. The Bitcoin ETF is a groundbreaking financial product at the intersection of traditional investment and the digital currency revolution. An exchange-traded fund, or ETF, is a type of investment fund that tracks the price of an underlying asset, in this case, Bitcoin, and is traded on stock exchanges like any other stock. A Bitcoin ETF allows investors to speculate on the price of Bitcoin without the complexity of directly buying and securely storing the cryptocurrency. It represents a bridge between the established financial system and the emerging world of cryptocurrencies, promising to make Bitcoin investment as straightforward as buying shares. If you like this video, please subscribe and hit the like button. Number 1. What is a Bitcoin ETF? A Bitcoin ETF stands for Bitcoin Exchange Traded Fund, which is essentially a fund that mimics the price of Bitcoin, allowing investors to buy into the Bitcoin market without actually owning the digital currency itself. This form of ETF comprises assets tied to the price of Bitcoin, providing a more secure and stable way to invest in cryptocurrency. By purchasing shares of a Bitcoin ETF, investors are indirectly investing in Bitcoin's market performance while avoiding the challenges of buying, storing, and securing Bitcoin. This accessibility means that retail and institutional investors can add Bitcoin exposure to their investment portfolios through a regulated financial product. Number 2. Accessibility for traditional investors. Bitcoin ETFs offer an unprecedented level of accessibility to traditional investors. By purchasing a Bitcoin ETF, investors can gain exposure to the cryptocurrency market without navigating the often complex world of digital asset exchanges, wallet security, and private keys. For those already investing in stocks, adding a Bitcoin ETF to their portfolio is as simple as buying shares of any company. This simplicity opens the door for a vast segment of the population who may have been interested in Bitcoin but were deterred by technological barriers. It's a leap forward in democratizing cryptocurrency investments, making them as straightforward as traditional stock trading. Number 3. Regulatory scrutiny and security. The introduction of Bitcoin ETFs has brought with it an increased level of regulatory scrutiny. Unlike traditional ETFs, which are based on well-understood assets like stocks, bonds, or commodities, Bitcoin ETFs are tied to a relatively new and rapidly evolving digital asset class. Regulators such as the Securities and Exchange Commission (SEC) in the United States have the challenging task of ensuring these funds meet all the legal and regulatory requirements designed to protect investors. As a result, Bitcoin ETFs may offer enhanced security and peace of mind for investors, as they must comply with strict regulatory standards, offering a layer of protection not present in the broader cryptocurrency market. Number 4. Market impact of Bitcoin ETFs. The launch of a Bitcoin ETF has significant implications for the cryptocurrency market. By providing a regulated and straightforward avenue for investments, Bitcoin ETFs can increase the demand for Bitcoin, potentially leading to higher market liquidity and price stability. Moreover, it signals institutional recognition of Bitcoin as an investable asset, attracting investors who may have been previously hesitant. However, it's also worth considering that as Bitcoin ETFs become more popular, they could also lead to greater market influence, where large trades of the ETF could indirectly affect Bitcoin's price, introducing new dynamics to the cryptocurrency's market behavior. Number 5. Security advantages of Bitcoin ETFs. Investing in a Bitcoin ETF offers considerable security benefits over purchasing Bitcoin directly. Investors bypass the risks associated with exchange hacks, private key management, and wallet security, all common concerns in the direct handling of cryptocurrencies. With an ETF, the fund manager takes on the responsibility of maintaining the underlying Bitcoin holdings, often using sophisticated security measures that are out of reach for the average investor. This level of security is particularly appealing to those who wish to invest significant capital in Bitcoin but lack the technical expertise or desire to engage with the digital currency's security requirements directly. Number 6. Tax and compliance issues. When it comes to taxes and compliance, Bitcoin ETFs may simplify the process for investors. Dealing directly with cryptocurrency can introduce complex tax scenarios, particularly when it comes to tracking capital gains or losses for every transaction. In contrast, Bitcoin ETFs are treated as conventional securities, and investors receive familiar forms for reporting to tax authorities, streamlining the tax filing process. However, it's crucial for investors to understand the tax implications specific to their jurisdiction, as cryptocurrency regulations can vary widely by country. Consulting with a tax professional is advisable to navigate these waters. Number 7. Fees and expenses associated with Bitcoin ETFs. Bitcoin ETFs, much like any other ETF, come with their own set of fees and expenses. These can include management fees, which compensate the fund's managers for their services, and potentially other costs like transaction fees. It's essential for investors to understand the fee structure of a Bitcoin ETF as it can impact overall returns. Typically, these fees are a percentage of the invested capital and can vary from one fund to another. While these fees are for the convenience and security of investing in Bitcoin without directly dealing with the cryptocurrency, they are an important consideration when calculating potential profits. Number 8. Understanding the potential risks. As with any investment, there are inherent risks involved with Bitcoin ETFs. The most prominent is market risk, as the price of Bitcoin can be highly volatile. This volatility can be amplified during times of market stress or regulatory changes in the cryptocurrency space. Additionally, there's the risk of tracking error, which is the difference between the ETF's performance and the actual price movements of Bitcoin. Liquidity risk is also a factor. In extreme scenarios, if too many investors try to sell their ETF shares simultaneously, it could impact the ETF's ability to operate effectively. It's imperative to assess these risks thoroughly before investing. Number 9. Bitcoin ETFs versus other Bitcoin investment vehicles. It's important to compare Bitcoin ETFs with other investment vehicles that offer exposure to Bitcoin. Directly buying and holding Bitcoin is the most straightforward method, but it comes with challenges related to security, storage, and a steep learning curve regarding the technology involved. Bitcoin futures contracts, available on commodities exchanges, allow investors to speculate on the future price of Bitcoin but involve complexity and the need for a more advanced understanding of financial markets. Bitcoin trusts and funds are other alternatives, offering shares that represent Bitcoin holdings, but they can trade at a premium or discount to the actual price of the underlying Bitcoin. Number 10. Future outlook for Bitcoin ETFs. The future of Bitcoin ETFs is subject to the evolving landscape of financial regulation and the maturation of the cryptocurrency market. As regulatory bodies become more comfortable with digital assets and recognize their potential, it's likely that we will see an increasing number of Bitcoin ETF offerings. This could result in more robust market structures, improved liquidity, and possibly a dampening of Bitcoin's historically high volatility. Additionally, as the market matures, we might witness the emergence of ETFs that offer exposure to a basket of cryptocurrencies beyond just Bitcoin, further integrating the crypto market with traditional financial systems. Conclusion. In conclusion, Bitcoin ETFs represent a significant milestone in the integration of cryptocurrency into the broader financial landscape. They offer a familiar, regulated, and secure investment vehicle for both retail and institutional investors looking to gain exposure to Bitcoin's potential. However, like any investment, they come with their own set of risks and costs. As the market for digital assets continues to evolve, so too will the products that allow investors to participate in it. The growth of Bitcoin ETFs is a trend worth watching, as it reflects the increasing acceptance of cryptocurrency as a legitimate and valuable component of a diversified investment portfolio.